Let's discuss this monthly time frame, and hopefully after this video, this monthly time frame, you begin to understand your bias, how you're going to be fluid on the monthly, how you're going to be shifting your bias from bullish to bearish to maybe reversing. We start off on any pair. We start off with the monthly. Now, this is from 1994 to today. Does any of it matter? Not much. Okay, what matters? The last couple years, maybe. Okay, so step zero, we can say, on this monthly time frame, which I put here is the rustiest because very few people even touch it. There's dust on this one. Most of them are on what? The daily. We'll see how disastrous it can be if you get your bias off the daily. Okay, so what's the point of the monthly? This is no fluff series. You need to make sure not to put any fluff. Even directional bias is too many words. We'll do one. So what does this word even mean, bias? This is where we're going to have to predict, okay, on the monthly. Many of you know that obviously we're wired to react. Valid micro signal at a valid macro zone, we react. But here's the thing, we need to decide on a bias. Most people don't, most skip it, most are scared to pick one because, oh, what if they're wrong? Or a million reasons why not. But we have to determine a bias, and then we can operate based on this bias. We need to have 2 feet on the ground, and then we can go on the little stuff that they love. This is a separate section. Hopefully nobody's on this stuff. If you've been doing this 10 years up, maybe you can touch that stuff. This is the smallest zone we use, is a 4-hour. This is why we don't like to make this stuff, put it in a course and put it in a video, because we tell them 4-hour zones. The smallest zones we use is a 4-hour zone. That's the smallest zone. And then they asked me if I could use a 15-minute zone and a 1-minute entry. I mean, this is some crazy stuff you guys do. You take it and then you twist it all up and then wonder why none of it works. But understanding these time frames, we need to get our bias off this monthly. Before we get on anything else, we need to identify this bias. Step zero, step one, whatever you want to call it. But what can we do on the monthly when we say identify bias? Is it going up or is it going what? Down? Or now here's the thing. Those people should know, the proper BFI traders. Does it really go sideways on the monthly unless you're trading some Switzerland, very stable stuff? Not really. So what do we like to say? Bullish, bearish, or maybe it's reversing. Let's see why this sideways, well, let's just look at it. Not much sideways besides this, but this was actually going up, not sideways. And then 2 candles, it made a U-turn. Another 2 candles, maybe a few candles here and then U-turn. 3 candles and then a U-turn. 2 over here. 2 over here again. So it doesn't really go sideways. It goes up and down and makes U-turns. So those are only 3 options for a bias. Hey, guess what? You don't know what the heck the bias is. Go with potentially reversing, because technically it could reverse at any moment. Okay, but you need to pick one. This is really important. Remember, if you have a solid monthly analysis and you determine your bias and make it crystal clear, then you won't have much trouble on this little stuff. But if you skip the monthly, or you suck at the monthly, or you do it wrong, or you don't determine the bias properly, you're going to have a lot of trouble on this little stuff. So half the job is over if you can get this monthly time frame and the bias proper. We need to orient ourselves. And here's the problem. A lot of you traders, a lot of your charts, 95% of your chart is useless. Okay, so let's see how we're going to orient ourselves. And this is how we're going to be doing it on this monthly. And the past couple years is really what I want to include. So this is what we mean when we say put on the chart the candles that matter. Okay, now which candle is this? Where are we today? March 2020. Isn't that a nice place to start? A lot of COVID kids started in this monthly candle here. There's a generation that started actually trading, and hey, what's this trading thing in this March 20? And there's a nice COVID generation. Hopefully they make us proud. They're real fresh in the game. They're about a year in right now, but hopefully the COVID generation of traders makes us proud. They don't end up like the Robin Hood and get robbed. All right, but let's orient ourselves here. Let's assume that we're at this monthly candle. At any moment, we need to be able to identify our bias. So there's two things that we need to do. The first thing is see which zone matters right now. It's a very tough question, okay, but drawing the one single zone that matters today, that's number one, okay? And we obviously look to the left here. Was this a valid footprint? Well, this is the previous zone we're looking for with this origin. Even though you may say there is no swing point it broke, well, you can consider this a swing point. These monthly moves and these monthly origins, they're not to be messed with, even if it doesn't break some major swing point. This is a monthly move. All of them matter. Every candle matters here. But how do we draw a buy zone? The cheapest price on the planet, the low, to the base of that candle. Basically everything except the top wick. And maybe this is a monthly buy zone. And we can see here, there is a first test to it, okay? Now, the second thing you may want to do, although it doesn't really matter at this moment, is the sell zone, which would be from this high. We're talking about the major monthly zones, not the small minor ones, but the edges. So the first ray at the most expensive price, non-negotiable, and the second ray at the base of that candle with the high. But didn't we say this is an exception? big body candle, or what do we do in these cases? You'll have to find a better base, and you won't have to search to the 80s. Nearby candle will give you a better base because, like we said, we don't want the zone to include part of the impulsive move. We want the zone to be the origin of the move, just the origin. Not the whole move, but just where it was born, where it came from. So this would actually be a better base, and this would be a proper valid sell zone. Okay, so when are we bullish? And when are we bearish? And when are we potentially reversing? When? Obviously bullish, a monthly impulsive move up. Now, what do I mean by a monthly impulsive move up? I don't like to give a number, but some say 5 to 10 candles. If you can't see where the monthly move is being pushed, this is what I like to say, the monthly push. Where's the monthly pushing? If 5 or 10 candles can't give you a picture, then there's problems, okay? But 5 or 10 candles, usually that begins the formation of a monthly impulsive move. If obviously they're going up, we would be bullish. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. By these 10 candles, you should be able to go from being potentially reversing to, at this stage, when you see these pin bars, maybe even when this breaks that high. But as soon as you see multiple candles forming an up move, we can go officially bullish. Now, what does that mean? If you buy at any buy zone, it's a high probability trade, okay? What does that mean, high probability trade? It just means it's more likely to be a winner. How about a low probability trade? It's less likely to be a winner. It's a better way of saying it. But is it illegal to take an LPT? Is a dollar from an LPT better than the HB, or is the HPT profit better than the LPT dollar? It's the same, but there's different potentials, obviously. But I don't want you to be allergic to LPT, to a low probability trade, because we'll see you can make hundreds of pips, but it's an LPT, but it's hundreds of pips, but who cares in the end? Just the point is understanding when we are in a bullish bias, when you see this monthly impulsive up move forming, anywhere you buy, it's a high probability trade, even though if it's real ugly, a real weak buy zone, it's high probability trade. What if it's a very strong sell zone, valid sell zone? It's a low probability trade. What if it's so strong, it's still an LPT? So you can buy, you can sell. Here's the thing about this bullish. Some say if you're bullish, you only buy. Well, you can catch these corrective moves, but we're going to get to that later. But the point is, HPT buys, LPT sells, and that's what you'll be doing on the smaller time frames, if that's your bias. Now, when do you shift from bullish to something else, which is maybe we've reached the zone? So when are we going to be potentially reversing at the monthly zones? Let's even go back even further. Okay, but well, we'll leave it here. What would your bias be, your monthly bias be, when price is inside a monthly buy zone? So what is your bias during this point? It would be potentially reversing. So what do we do? Here's the real question. What do we do? Okay, everyone's a genius when it's bullish, just buy, or LPT sells. Bearish, okay, do this. But we know that most people get wiped with the U-turns. So what do we do when it's in the zone? We don't get paid for determining the bias. You get paid for trading your bias. Separate section here, VIP, action. So what do we do when we're potentially reversing? Well, fluidity at the deeper half. What can I say here? Obviously, every buy zone has a deeper half, and every sell zone a deeper half. Well, the best advice I can give is maybe on your little time frames, buy in the deeper half of a monthly zone. Guess what retail are doing there? Selling. They sell low, by the way. Where do? You buy it from China real cheap and you sell it to them at the mall for rip-off prices. And they're likely to wake up right now and start buying. So obviously retail, the last ones at the party, they're always one step behind, unfortunately, because of the way they're wired, the trend lines and everything is down, so it has to go down. Okay, but buying at the deeper half of a buy zone, some of the best trades of your life, super high probability. Selling maybe at the deeper half of a sell zone, super high probability trade. This is not the time to start buying. This is not the time to start selling when it dips into a buy or when it goes into a sell zone. So what's our bias right now? Potentially reversing. But what did we do in the deeper half? We bought. Now here's the problem with many traders. They do not react, unfortunately. They want to know, well, is the zone going to get wiped, or is the zone maybe going to work? I need to know, because if the zone is going to get wiped, so I can sell, and if the zone's going to work, so I can buy, these guys need to know before. That's why when they click and what they wanted to happen didn't happen, they get bothered because they were predicting. We need to react. So you're going to be in there on those time frames reacting, deeper half of a monthly buy zone, and you don't need to know if you're bullish or bearish or if the zone is going to work to click. Your job is obviously to react. You don't need to know what's going to happen next. Okay, but what is your bias? Potentially reversing, but you would be action, fluidity at the deeper half. You would have been super fluid on those little time frames you love, and I'm sure you could find somewhere to buy in the deeper half of a buy zone. But what's your bias? Potentially reversing. Now, the next few candles we see here, it went inside the monthly zone. A great sign if somebody comes in and buys it up. Now, look at this bullish or bearish pin bar, which any BFI trader already just screaming at him, her, what it is. Okay, but a quick recap. These kinds of pin bars is just a crazy wick like this and a pin bar. When you see a wick, we need to understand this wick if it's rejecting higher or reaching higher. Does it want to go higher or it does not want to go higher? Well, let's look at the previous low. Step one, previous candle, in this case highs. 1, 2, 3 highs were blown. That's a bullish sign. Let's look at our second sign, which is it at the middle or at the edge? Well, some people get confused by this. Middle or edge of what? The most recent impulsive move to the left. So if you, the candle range, if you drag it to the left, it's right in the middle of the move to the left. And rarely does price reverse in the middle. Maybe from here or the edge of a move, not in the middle, as we know. So if both of these conditions are met, previous highs blown and it's right in the middle, it's likely reaching higher. Now, some people, retail kids, maybe see a bearish pin bar, let's sell, but the BFI trader actually sees this as bullish because it's reaching. That's bullish in our eyes. And what does it mean, reaching? Likely the wick becomes a body. The wick gets filled. So this wick was not rejecting, obviously. It obviously was reaching higher. Now, here's the point. This is a video on the monthly bias. What's the bias right now? Well, it may be a good time to shift from what? Bullish, from this potentially reversing. Now, there's no right or wrong about when, but maybe not too early. But when maybe is a time for that? Well, you see a bullish signal that prints away from the zone. Some people, what do they like to see? A monthly footprint, and then they go bullish officially. And what does that just mean? HPT buys, LPT sells, and they go on their smaller time frames and trade after they've identified their bias. Maybe that footprint, they're officially bullish. There's different times you can go bullish from potentially reversing, but it's a labeling thing. You should already be long and not now waking up to buy. Okay, but now officially we are bullish. Now here's a good time to basically describe this A to B monthly impulsive move. Okay, this is an A to B move that originated from a monthly zone, and here we are. Now, obviously, it is going down. What do you think this looks like? Maybe on the daily time frame. a month of daily candles may be an officially a downtrend. So the point is, we don't want to be the retail sellers who are selling their face off, hoping for zero because now officially downtrend, lower lows, lower highs. All my trend lines say down. My moving averages say down. All that great stuff they use. But for us, it is what? Maybe a healthy retracement of a monthly A to B move. Retracing to the 50 is very healthy and actually very normal for any A to B monthly move to retrace 50%, which is actually the point where most will be hoping it goes to zero and selling. But not a bad time, by the way, maybe adding to your position of your existing position down here. But for us, this is a healthy retracement on the monthly. Don't be tricked by this stuff on the daily 4-hour and going bearish. In fact, if you see this on the daily or 4-hour, that's the time to buy. Okay, but if we continue this move up, we are officially still bullish. You are not going to go bearish from one black candle, hopefully not. Okay, but HPT buys, LPT sells. That's all we're doing on the little time frames. And another monthly footprint. Great sign. But we are still bullish. Now, here's an interesting point. What is your bias going to shift towards immediately when we enter a monthly zone? So, potentially reversing when at the monthly zones. And here, what is your bias officially? If someone were to ask you right now, potentially reversing. What does that mean? Okay, what do I do? Fluidity at the deeper half. Okay, but here's a great way to handle these zones, just like what GJ has done recently. We know that the VIP section is the deeper half. That's where the BFIs like to dump, and that's actually where you'll have a lot of buying. So here's one way to handle this zone. You almost always will get a reaction from the bottom half. It'll go straight to zero, I doubt it. But you get a sell-off. Okay? You have to be very careful from any sell-off from here. But the sell-off from here, it's probably not BFIs, but let the market speak here. Now, sometimes, well, not sometimes, you can catch this trade, which is a short from the bottom half of the monthly zone. Now, I wish it goes straight to zero in a straight line, but you could get a slight reaction because you almost always get some selling from a sell zone because there's sell OFV sitting inside there. Okay, but a little tap on the monthly is hundreds of pips. Not bad. But what do we have here? It closed as a bullish pin bar. Not a good sign that's saying, okay, it's going to go straight to zero. The zone is working. The zone will be respected. And during this whole scenario, we will be potentially reversing. Okay, but what can you do? You can buy and take it up into the deeper half and find a sell, but fluidity, I can't teach it. You can't watch this video and be fluid. You're gonna have to trade, okay? But try to understand maybe at this point what kind of environment is going on in the retail world. A lot of buying. Maybe those people who were hoping it went to zero, now they converted and they're buying. So there's actually more buying and it's easier to sell because look out the window, everyone wants to buy it. That's how we need to think about it, especially in the deeper half. What's your bias right now? Potentially reversing, but does that mean go home and sleep? No. Action, you can trade at the zone. The best trades of your life may happen at a monthly zone, and it makes a U-turn. You could even up and down the U-turn or down and up. You could really enjoy the movements. Okay, so most people get wiped at the zones, at the U-turns. But what are we going to be doing? Fluidity at the deeper half. Maybe this is some of the best sells of your life. And do we need to know, is the zone going to work to take that sell? No, you don't. Is that sell HPT or LPT? Super HPT, you can consider it, but we don't know, because if you say the sell is HPT, then you're saying we're bearish. Too early to say that yet. If you're saying the sell is LPT, you're saying we're bullish. What if the zone ends up working? You cannot predict if this. You do not need to take the weight off your shoulders. Is the zone, is it going to wipe it or is it going to not wipe it? We don't need to know. Trade the deeper half. And then the market will tell you, hopefully you're already in by then, on what the market wants to do. So here we have a sell-off coming from the deeper half, and you're real excited and in profit that you were fluid, and real thankful that good thing I was fluid. Now, were you bullish, bearish? No, you were potentially reversing neutral because we're at the zone, but you're being extra fluid. Okay, bullish, okay, buys, everyone's a genius, the market's going up. Bearish, all right, but potentially reversing. And right when we hit a zone, and the whole time we're at the zone until we shift our bias. Here's the next question. When do we shift our bias? There's only two options. It's either going to wipe the zone, or the zone will be respected, or the zone will be disrespected. Don't complicate it, okay? First of all, maybe this person sold in the deeper half and they don't really care what happens, because maybe it comes back up to wipe it, they'll buy. Maybe it continues down, great. But fluidity at the zone is key. So what's your bias right now? Potentially reversing, but you should have been taking action in the deeper half of the zone. So when will we go bullish? Well, at least a zone wipeout and candle closure monthly, beyond at least. Okay, but here's the tricky thing about this one. There's another basing zone. Why didn't I draw this one? Because this current one hasn't gotten wiped yet. So who cares about anything thousands of pips away? But you may be entering another reversing zone, a basing zone on the monthly. But don't worry about that until this one is wiped. That's the problem with most. They think they get $1 for every zone they draw, and I wish that was the case. Draw the one zone that matters. That's really the hard part, but use some brain cells and you'll figure out which zone matters today. So that would be the bullish case. Well, when should we go bearish? That's depends who you ask, okay? But first of all, we want to A to B monthly move. We need to identify this 50%, which is a healthy retracement, okay, on the monthly. Well, I needed at least to close below that to go bearish, or multiple monthly candles, maybe 5 to 10 that are forming a move bearish, okay? But really you want a footprint, but this case I don't see any previous swing points. But you would go bearish at a monthly footprint that breaks previous. You could, this is the very early ones who could go bearish real early, which is, they say, right when it breaks that low, that's, to me, I'm going bearish. A little early, but not a bad idea. Closes above, wipes the zone, may be bullish, but watch out for the basing zone up here. But you would be selling, and only here when you're bearish officially are those sells that you took initially, do they become HPT? But now is not the time to wake up and sell. You would be selling from here, from the deeper half, but officially bearish later. And that's how we want to be fluid at the zone. And maybe it forms a down move, maybe it doesn't, maybe it wipes the zone. But this whole, we're going to be potentially reversing this whole area, which is at the zone here, until we get that reaction. Okay, so this is how we're going to be shifting on the monthly. Maybe we can discuss HPT and LPT. This is the most basic thing, but it seems they forget it. A high probability trade. Maybe that's the one where it's the impulsive move, the footprint. You're on the side of the monthly, you're on the side of the BFIs. That's what you want. And you want to handle this trade in a very certain way. These are the best trades of your life. Now you can also take an LPT. Maybe you're trying to catch a little retracement, and you know it's a little retracement and LPT stuff, corrective. You need to know how to handle that as well. But the monthly is where we decide what is what. You can't go on the smaller stuff and decide if it's HPT or LPT. Okay, but how do we handle each one? Well, two ways. Two ways, keep it simple. Let's put these targets, which is what we mean when we say TT, T3, T4, T infinity, whatever it is. This is how you want to think about it. And we finally dipped into a buy zone, okay? And you clicked buy, valid signal, valid zone. You decided to react. Great. Now, where's my target? Where should I get out? What should I do? Panic. We're going to get into this in the swing scalp video, but T1, T2, T3, the swing points, T infinity, okay? Who should use T1? If this is an LPT buy, maybe let the whole thing run to T1 and get paid. But maybe this is a buy from this is an HPT buy. Well, maybe let it run, obviously risk-free, to a further target, T2, 3, 4. That's really up to you. I wish I could tell you when you should close it. That would be a nice one. Okay, but don't hope for too much on an LPT, because that's exactly what they do. They take an LPT, very low probability, some very weak 4-hour basing zone against the trend, and they let the whole thing run and hope and pray for the moon. They also take a great trade. They finally caught an HPT. They're on the monthly. They caught the great footprint. T1, they bail. Actually, before it even gets T1, they close all of it, because just in case, that's also could be a problem. HPT, maximize your profit potential of your edge. We're here to squeeze the probabilities. That's why this is blue. To squeeze the probabilities and take advantage of what usually happens. Okay? We'll talk about 4-hour zones, weekly zones, but for now, this is about getting on the monthly bias. Let's delete all of this. And drawing the zone that matters. Maybe we're not at a zone, okay? But we're at a zone, determining the bias if it's either one of these 3 options, and knowing what you're going to be doing, and then going in, drawing your zones, 4-hour, whatever it is, and whether it's a buy zone or a sell zone, just understand what it is and its probability and how you're going to deal with it. It should be very robotic, automatic. Only emotions will get involved, and the higher probability stuff, you're going to do the opposite what you should. You're going to close half, or you're going to get paid so quick. And on the low probability stuff, you may start hoping and praying. Take advantage of the probabilities. Do what usually happens, okay? But get the monthly bias right, most of your job is over, okay? Monthly bias, fluidity on it, the probabilities of the trades. You can't go down on these little stuff and then see an engulfing against you. Oh my God, you're going to doubt everything. You can't doubt your bias. Okay? It's just your monthly bias and the probabilities and you just reacting. Okay? No fluff. This is how you're going to deal with the monthly. Okay? And half the job is over. Let's see what we're going to be doing after we get our monthly bias and get a sense of the direction and the probabilities of the buy and the sell.